Hi, everyone. Brett Sebion, financial coach at Emerj360. Hope everyone had a great holiday season. Happy New Year. And this is the first market and economic overview of 2026. As a reminder, Emerj360 is a division of TrustPoint. TrustPoint actively manages your portfolio, makes changes on your behalf, etc. So we will be covering how markets did in 2025 and some things we're looking at heading into 2026. A lot happened in 2025. The net result was positive when we're talking about returns, but just want to touch on the big picture. So both global stocks and bonds were up in 2025. Inflation continued to moderate. Global growth remained resilient. And as a result, most investors were happy, and we'll see the returns across different areas of the market. But that did not come without some volatility earlier in the year, mainly around March, April of 2025. There was strain on certain economies due to the tariff pressures. But throughout the year, again, inflation continued to moderate. We saw growth continue to be positive. Financial conditions, improved, which all of that together allowed markets to rebound and have a strong positive year by the end of it. So the first chart we're going to look at here is the global stock market. So we show this every time we give a economic and market update, but 2025 is the last part of the chart here. So you can see the line dive down. That's what we investors were experiencing in April. Peak to trough, we went down about 20%. Some areas of the market went down more, but we had another one of those, what we call V-shaped recoveries. And you can see how global stock prices really rebounded into the end of the year. And the next chart shows this numerically. Global stocks were up about 22% in 2025. And no matter kind of what area of the market you look at, investors experience positive returns. One thing that jumps out on this page to us is the outperformance of international stocks relative to US. And that's the bottom part here, whether, is international large cap, small, mid, or emerging markets, all up over 30% in 2025. And this was an area of the market that we added to a couple different times throughout the year. And I'll cover that in a couple slides. But as a diversified investor, this is something that, you can get excited about. For the last 5 to 10 years, we really saw dominance, outperformance within US large cap technology. So there is a very, again, specific area of the market that outperformed the rest. What we've seen in the latter part of 2025 is this leadership that has expanded, right? Specifically into international, stocks. And again, we'll show you the changes that were made to portfolios in a little bit. So that was on the global stock market side. Fixed income markets also had a good year. So the global ag was up about 4.85%, and US ag was up over 7%. But you can see all different areas of the fixed income markets had positive returns in year to date in 2025. So whether you were invested in the stock market, the bond market, or any really combination of either, you as an investor experienced positive returns. So taking all of that, how does that apply to how we're invested in client portfolios? This is a snapshot of our current positioning. So let's say you're in a balanced growth objective where we target 50% to stocks and 50% to bonds. We are slightly overweight equities, about 2.5%, and slightly underweight fixed income, about 2.5%. So no crazy deviations from the target, and there were some changes within each broad asset class bucket, equities and fixed income, that we made, and I will cover a couple of those now. So we always show this slide and talk about the changes that we make throughout the year. The two sections that I want to focus on are from August and September. So both of those times we increased exposure to international equities. In August to international developed equities, in September international developed value equities. So again, if global growth remains positive and resilient, we could continue to see an expansion of leadership. We believe that could come from the international stock market side, maybe from the small cap, US small cap equity side. But everything that we saw kind of play out in 2025 and where we think those themes might be heading in 2026 have led to some of these changes. On average or on balance, we'll make about 3 to 4 changes a year within portfolios, whether that's within, the equity bucket, the fixed income bucket, or if we decide to, deviate away from our targets within the objectives that we manage. But all of that is dictated by the opportunity and or risks that we see, our investment team sees out in the markets. So these are just some points that summarizes, again, a lot of what we talked about. The world economy really does remain, resilient. Fiscal and monetary stimulus are expected to continue supporting economic growth well into 2026. The lower dollar and oil prices should also help. Geopolitical risks, while they always persist, we believe tensions between the U.S. and China have lowered significantly, and the downside or the tail risk tied specifically to tariffs has been avoided at this point. Earnings expectations are a little elevated, but again, the macro backdrop is supportive. Whether it's the fiscal policy easing or inflation continuing to moderate. And really, we've seen this shift from narrow market leadership to broader equity participation when we talk about the outperformance of international equities, and that theme that could continue on into 2026. Higher interest rates provide attractive real yields as inflation has remained, contained. So we always like to talk about the inverse relationship to interest rates and bond prices. So when rates rise, bond prices fall, and when rates fall, bond prices rise. So that is, some of the action that we saw within fixed income markets in 2025. But at the end of the day, the risk reward outlooks between stocks and bonds still slightly favors equities, and that's why we are about 2.5% overweight equities relative to fixed income within our objectives. So thanks, everyone. Thank you for being clients. Hope everybody had a great holiday season, a great new year. Happy to have any calls or meetings, update to financial plans, go over performance, whatever is on your mind, we are always here. So thank you so much for being clients, and please reach out with any questions, and we will see you at the next market and economic update.